I think generally the dollar is very well bid. Turkey was a catalyst and a bit of an excuse for the latest surge in the dollar. The dollar, if you look at it, is really just a bit of a flat track bully at the moment. It's just knocking over the weakest currency it can find, really. Turkey was, obviously the weakest currency over a period of time. Today you've had the South African rand. Emerging market currencies in general are fragile. China's back in the mix. So it's just moving from one currency to the next. And that's not unusual when the dollar is generally strong.
Are you concerned about pain in Turkey spilling out to other parts of the country? We've been having this conversation for the last couple of days. Where do you fall?
Yeah, I think, look, obviously from a Turkish real economy standpoint, Turkey's economy is going to be hit really hard by this financial crisis. I think in terms of the global economy, you have to keep it in mind that Turkey's roughly about 1% of global GDP, not that large. So the contagion effects are going to be really on the financial side. People obviously looking very closely at European banks. European bank stocks are back down again today. We've looked at this in considerable detail. It seems containable, albeit maybe for a few banks that have, a particular presence in Turkey itself.
Well, everybody says the China factor is key. You just said China's in the mix. Paul, not only is China in the mix, Hong Kong had to intervene in the currency market to combat depreciation pressure. First time we've seen that in a while. Tencent saw its first profit decline in 13 years. Copper's at a 13-month low. How worrisome is China right now?
Yeah, the markets are certainly testing the Chinese authorities to see how much additional stimulus they'll consider adding. We have seen some slowing in China. It's been infrastructure related. It's been policy related. Reforms are driving this. So how far do they want to hit the brakes? We think they let off the brakes here, and that gives commodities a bit of a break higher. And it will allow the investors to see that China's not really going to repeat 2015 again, and that the economy is really very stable.